All right, live again. I'm on my lunch break. This is my last video, unless you guys have more questions. And then I'm going to go back to work because I actually have a full-time job. Anyway, like, subscribe, comment, tell your friends about me. And if you have a question about personal finances or the military or even politics, shoot me a freaking email. I will make a live anonymous video for you because I am a great man. And all I ask is that you share me. You tell people about me so I can grow my channel. All right. So I got another email from a guy I'll keep anonymous. We'll call him Mr. K. And he says, "Hey, strong man." He says, "Returning customer here." And I don't charge, by the way, at least not yet. "Pretty straightforward question for you. What do I do with my money?" And then he sends me a snapshot of my favorite brokerage of all time, Robinhood. He has about $40,000 invested in Robinhood in various stocks. He didn't show me what stocks he was invested in, but whatever, that's fine. But he's got a decent amount of money, and he's had 52% gains over the last year. Now, the first thing to keep in mind is just because you made 52% this year doesn't mean you're going to make that going forward. You have really good years in the market. Maybe the market, is very ecstatic and optimistic and stocks go up incredibly. And then you might have a couple crappy down years. So don't think that the market's just going to go up by 52% every freaking year. This is a very rare opportunity, but you took advantage of it, and now you have $40,000 in your brokerage account in Robinhood. So you said, as you can see, I have about 40K saved up. I am 19 years old. Holy crap, that's a lot of money for a 19-year-old. And you have 2 years to graduate, so I guess you're still in college. Hopefully you're getting a good degree. I live at home for free while I go to school for free, scholarship, so you have no debt, which is freaking awesome. And you have no, and you're going to college and potentially getting a good degree. You got scholarships, and you're working. You're making $26 an hour working part-time. So you make about $30K a year. And then you say, I estimate by the time I graduate, I'll have over $100K in my brokerage account. Well, like I just said, you may have $100K depending on what the stock market does and how much you put into it. So don't think you're going to have $100K because the market might tank over the next couple of years because valuations, especially U.S. valuations, are high. Now, maybe the market won't tank, but you can't predict what's going to happen. You don't know. So I would not count on having $100,000 in your brokerage account. And then you said, I plan to move to a city, a big city, which seems like a decent city to me. Once I graduate, what should I do with my money? Leave it there for now and let it grow? Put a down payment on a home? Something else? Happy to help clarify any questions. Appreciate your insight. Well, here's the thing, Mr. K. I haven't asked you any clarifying questions, but the thing is, you need to sit down and write down financial goals. You need to have short-term financial goals. You need to have intermediate-term financial goals and long-term financial goals. Now, short-term goals are like, okay, I want to go on a nice vacation within a year or two. And if that's the case, you want to have that money in cash. Intermediate-term goals, maybe you want to make a down payment on a house in the next, 5, 6, 7 years. That should be in a mix of cash, bonds, and, maybe a little bit of stocks. But you don't want to have all your intermediate-term goals concentrated in stocks because stocks are very volatile in the short term. And then you have long-term goals, which is like retirement, or maybe if you want to have a kid one day, maybe you're thinking about starting a 529 plan, whatever, when you get married. So you need to sit down and write your financial goals. And then depending on how soon the goal is, basically the further out the goal, the more stocks you can invest in. And the closer the goal, basically you want a lot of cash or short-term bonds. So you need to be really careful with where you're putting your money, depending on what goal you want to pursue. Now, here's the first problem that I see. And you have a good problem. You have a lot of freaking money, okay, for a 19-year-old, it's amazing. I'm pretty happy for you. And I'm not jealous, or maybe I'm a little bit. But you have $40,000 inside a taxable brokerage account called Robinhood. And I don't know what stocks you have, but if you've bought a bunch of like meme stocks like Tesla or AMC or whatever, and you've made 52% on those, you may want to think about possibly shifting out of those and buying an index fund like VT. That's the total world stock market index. Or maybe you could buy VTI. That's the total US, or VXUS. That's the entire world outside the United States. If you're highly concentrated in a few stocks and those stocks tank because they've been overbought, well, you have $40,000 now. You might have $20,000 faster than you think. So you need to look at your portfolio and see what you're freaking invested in. If you're highly concentrated in individual stocks, you probably want to rotate out of there and take some gains. Now, here's the thing. When you sell at a gain, you're going to owe taxes. Now, you can either pay a short-term capital gain or a long-term capital gain. Short-term capital gains are stocks that you have made money on that you sell within a year. So if you buy a stock in December and then you sell it that next March at a gain, you're going to pay short-term capital gains rates, which are taxed at your marginal tax bracket. So you're not in a high tax bracket right now, but it's always better to take long-term capital gains because you're taxed at a lower preferential rate. So if you have all your stocks and they're all in short-term capital gains, but you want to trim some of them, maybe you should consider waiting at least a year before those stocks qualify for long-term capital gains treatment. And then at that point, you can start liquidating some of your stocks. It's up to you. If you have a really short-term goal and it's a pressing matter, then yeah, you need to liquidate now, maybe even if you have short-term capital gains. But if you don't have any like kind of determinate goals in your mind right now, before you write them down and figure that out, well, you can at least maybe let them ride until you qualify for long-term capital gains treatment. But that's really on you because, like I said, the market could crash. So you need to make a choice, and based on what your goals are, that's what you'll do with your money. Now, I don't know if you have a cash emergency fund, but once you graduate college and you move out of your house, you're going to need some kind of emergency savings. So you might want to consider liquidating some of those stocks and putting them into a high yield savings account, maybe have 3 to 6 months of expenses as a cash cushion. Because when you move out, you're going to incur expenses. You're going to have to start paying rent, and you're going to have to maybe buy some furniture and all sorts of crap, deposits on your apartment or house. So you're going to need a cash buffer when you leave your house within 2 years. And it's important that you have that in cash so it doesn't fluctuate rapidly like the stock market does. So you should definitely think about considering doing a emergency fund. Maybe wait till you have long-term capital gains. It's up to you. And then maybe sell some of those to have that cash savings. So when you move out, you're good to go. Now, all your money's in freaking Robinhood, all right? Robinhood doesn't have any tax advantage accounts. Now, since you're earning money, you qualify to contribute to a Roth IRA, and you can do $6,000 a year. So every chance that you get, you need to put at least $6,000 inside your Roth IRA. You can open one at Vanguard, Fidelity, whatever. And you can buy the same freaking crap that you're buying inside of Robinhood. It's just sheltered within a tax advantage account when you do it with inside a Roth IRA. So don't dump all of your investable money into Robinhood because there's no tax advantages. You want to start maxing that Roth IRA now. It's going to grow tax-free. And when you're 59 and a half, you're going to have a ton of money and you're not going to pay any taxes on it. All right. So start looking at the Roth IRA. What else? All right. Home down payment. Well, it's up to you. Here's the thing with homes. You need to find a place where you think you're going to live for basically the rest of your life until, maybe retirement. Because the last thing you want to do is move to a city and then you're like, oh, I need to buy a house, because that's what everybody does. You buy a house and then you buy a freaking house. You pay a ton of closing costs. You pay a down payment that sucks up a ton of cash. And then you're like, oh, crap, I found a better job across the country. Now what do I do? You can either sell the house and get creamed by, sales costs. You got to pay closing costs and realtor commissions. You're going to get screwed on that. And you're going to have to potentially, or you can rent the house out. But if you rent the house out, that's just a bunch of crap you have to deal with. Then you have to hire a property management company, and it's just a pain. So I would not worry about a home down payment right now until you graduate, you get a solid career, and then you finally determine if you want to settle down in one area. And then when you do that, then you can start thinking about saving for a home down payment because then you're going to stay there and you're not going to freaking move. So that's what I recommend. So what should you do with your money overall? It's all dependent on your financial goals. But at least have an emergency fund, start preparing for it because you're going to eventually move out of your house. Then you need to think about putting your money into a Roth IRA, $6,000 a year. And I believe you can even still max your 2020 Roth IRA because you have until April 15th. And then you can go ahead and max your 2021 Roth IRA. So you can literally take 12 grand right now. You probably have to sell some of these stocks, or maybe use your income from work to do that. But if you sell the stocks, you're going to have to pay capital gains. But you can at least move 12 grand into that tax advantage account. And then for the next, 40 years, it can grow tax-free. You want to do that every freaking year. $6,000 into that account. And then from there, graduate college, get a job, wait till you determine whether you want to live in a place or not for a long time. And then at that point, you can start saving for a home down payment. Now, when you eventually get to that point, you want to have that down payment in cash because you're going to have to pay probably 20% down plus closing costs. And the last thing you want to do is have your down payment that you need in a year or two in freaking stocks, because stocks don't always go up. They definitely crash. And there's definitely a thing called a bear market where stocks keep going down and down and down. And the last thing you freaking want is to have to sell when the market's down. So that's something to consider as well. But at the end of the day, it's your decision. I can't tell you what to do with your money, but you need to identify your goals. What do I want to do with my money? If it's a short-term goal, I need to have it in cash. If it's intermediate, like 5 or 10 years from now, you want to have some kind of mix of cash, short-term bonds, maybe, and maybe a little bit of stocks. And then long-term, like retirement, because you're young and hopefully you have a high risk tolerance. If you're not worried about market fluctuations and you want to retire at 59, you can start putting the majority of that in stocks, but it's all on you, man. Okay. So that's it. So it's up to you. Just be careful of taxes, because if you start selling these stocks and it's a short-term capital gain, you might pay more taxes than you think. So I would research short and long-term capital gains, write down your goals, and then once you're ready, make that decision. All right. So that's that. Got one comment here. Don't F it up. Most 30-year-olds aren't in your position. This guy's 19. He's 19. He's got 40 grand and he expects to have 100 grand, which, I mean, hopefully he does, but who knows where freaking U.S. stocks are going to go from here. They could crash because they're so overbought and they're so overvalued. But that's my personal opinion. But who knows? Maybe he'll have 100 grand. And if he starts maxing his Roth IRA right now when he's 19 and he's earning income, oh my God, he's going to be rich. Woo! As long as he doesn't do anything stupid with his money. So that's that. All right. Any more comments from anybody? Any more questions? If you don't have them now, you can always email me and I will answer your question with a live personalized video and I will keep you anonymous. All right. So I'm going to go back to work now, unless anybody has any more questions. Like, subscribe, tell your friends about me, please. I'm trying to grow my channel here. And you guys have a wonderful day. Cheers.